Ignition. We have liftoff.
I'm getting excited about Grab stock. Do you know Grab? Do you know Uber? Well, Grab is the Uber of Southeast Asia. They bought the business from Uber. They couldn't compete with Grab, so Grab bought the business. And it came out as a SPAC in 2020, 2021. Plummeted. They overpromised. They couldn't deliver. But now they've been on the right track for 3 years. The stock has doubled since 2022. This is not a stock that's going to double in 3 months or 6 months, but they're headed in the right direction. I think we could be at 10 in the next 6 months. It's possible. They might have their first quarter here. When they report November 5th, they might have their first quarter with 1 billion revenue. The trailing 12-month revenue, we're just starting. It's going up. It's in the right direction. I like what I see. Back in 2022, 1.4. 2023, 2.3 billion revenue. 2024, 2.7. 12 months ending June 30th, 3 billion, 18% increase. Revenue for the quarter ending June 30th, 2025 was 819 million, a 23% increase. We might hit the billion mark come November 5th. This stock is getting exciting to me. Dollar cost average on this one. Over time, you want one that you can hold and keep for a while? And dollar cost average, this is the one. The shares outstanding. Yes, they did jump back when they formed out of a SPAC, but it's been pretty level, guys. It's been pretty level here. I like to see this. The net income has been in the dump since 2020, but headed in the right direction now. The earnings per share for years, negative, slowly inching up to a slight penny profit. 2022, negative 44 cents earnings per share. 23, minus 11. 2024, minus 3. And the 12 months ending June 30th was 3 cents positive, not negative. Earnings per share for the quarter ending June 30th, 1 penny. They're finally getting to positive earnings per share, and that excites me. And some fantastic news, Grab Maps to map Mongolia with Tino Super App in the first countrywide map-making partnership outside of Southeast Asia. There's the deal. Think about Google driving around your town, mapping the area. Grab is doing that with Mongolia. They're going to develop local maps for Tino with its map-making software suite and provide an on-demand map service. This will include geocoding and routing APIs, which will enable more precise geolocation capabilities, address capture for undermapped areas, and enhance navigation accuracy. Grab is one of the world's only on-demand platforms that has built and relies upon its own proprietary maps and location-based technology. Leveraging its success in Southeast Asia, Grab Maps offers these services to third-party enterprises, including Amazon Web Services, Microsoft Bing Maps. The Grab Maps is huge. It isn't just bundling services anymore, it's exporting infrastructure. They've signed a first full country mapping project in Mongolia with Tino, and there's more international deals on the way, including in the Middle East. The pipeline is expanding. So this marks a diversification push, potentially unlocking high-margin software as a service like revenue streams. Now, this will boost margins amid ongoing profitability efforts. So this is a new, higher-margin business-to-business revenue stream layered on a profitable consumer engine. This is exactly the combo that we need for fresh money into the story. They have a partnership with Alipay. Once again, I think 1 billion is in the quarter. It's quite possible when they deliver results on November 5th that we have a $1 billion quarter. That milestone alone would cement Grab as a serious global player and set the stage for, I hope, a $10 stock. So Grab has mobility. They have the deliveries. They have fintech, plus an exportable infrastructure business that others will pay for. During the Wall Street Journal Leadership Institute interview, Anthony Tan says, that's the CEO of Grab, Grab's real pivot isn't just new AI features, retaining the workforce to use AI across rides, deliveries, fintech, and maps. That points to faster execution, lower unit costs, and a sturdier path to margin expansion and cash flow. So I'm thinking Grab looks mispriced to me. 25 billion cap with 5.7 billion in net cash, guiding to 3 to 3.4 billion in revenues. And with all the news that has been coming out, I think we're at a $10 stock here in the next 6 months. And my goal is 17 at the end of 2026. And Grab is in partnership with WeRide. LTA appoints Grab to operate WeRide autonomous vehicles on 2 designated routes in Punggol. This is the start. AIR features 2 WeRide vehicles models, a 5-seater and an 8-seater. AIR vehicles have passed Singapore's stringent milestone assessment, proving they can safely navigate the public roads. We see the potential of autonomous vehicles to improve connectivity within underserved neighborhoods in the near term. Together with our AV partners like WeRide, we are building a leading AV passenger fleet with a diverse range of vehicle models to bring more transport options to the public. So Grab is just like Uber. They have the food deliveries. They have the grocery deliveries. They have Express. You can send packages, documents, and beyond. They have the rides. They have autonomous. They have the financial services. They're in the insurance business. They're making revenue off ads. And from the most recent 13F filing on Grab, the institutional investors are increasing their stakes. Morgan Stanley increased, BlackRock increased, JP Morgan increased, Wellington increased, and on and on and on. What do they know that we don't? I'm going to continue to invest in this stock over the long term. It's not going to double tomorrow, but I'm going to dollar cost averages, and I can see us going to 10, going to 15. It's going to take some time. I'm curious to see how earnings play out. I believe it's on November 5th. I'm not going anywhere on this stock. This is a long hold for me, a long-term investment for me. I hope you're doing well. Take care. Bye.